Welcome to the Professionals of the Inland Empire show with your host, John Tulac.
And welcome to Professionals of the Inland Empire, affectionately known as PI. I'm John Tulac, international business attorney located in Claremont, California. That's the center of my global economy. And you all are your own personal center and your own part of the global economy. And you can't do that all by yourself. You can't run a good business. You can't be a good consumer without good help. And the whole purpose of this Professionals of the Inland Empire podcast is to feature the great professional talent that we have right here in our own backyard in the Inland Empire. And today we're going to be talking with Craig Dart, who's a CPA, and Soeren Aarup, who is a business broker, and talk about how their roles in their respective fields can be mighty darn helpful to you in your business, whatever it might be. So sit back and help yourself to a slice of pie. We're underway. Welcome to Craig and Soeren. Good to have you here today.
Thanks, John.
Thank you. Thank you for having us.
So Soeren, let's start with you. As a CPA, how'd you get to where you are, and what's your secret sauce? What do you do and how do you do it?
I'm sorry, Soeren or Craig?
Craig.
Craig. That would be you.
I thought you were giving us a test already. Now, my name is Craig Dart. I've been a CPA for over 25 years. Kind of a funny story. I actually got my start in accounting when I was 17. I was a box boy, and the accountant at the Ralph's grocery store wanted a day off, and so my boss asked me if I'd become the bookkeeper on Saturdays. And so I got the bug when I was 17 and started my first accounting job there. From there, I progressed and went on and got my master's degree and was hired by one of the big four accounting firms and worked there for a number of years. And then went on to a regional accounting firm and worked there as a partner for a number of years as well. 10 years ago, I started my practice, which focuses on contractors, manufacturers, distributors, and providing a full range of accounting services, bookkeeping, and tax services to clients in the Inland Empire and actually all over. I have a number of clients throughout California that I do employee benefit plans for and help consult on that.
Okay. And for whatever reason, what popped into my head as you were talking at the beginning was, how does Lawrence Welk do accounting? A 1 and a 2 and a 3. But the thing is that accounting is more than bookkeeping. It's more than numbers. And the role that the accountant has, whether you're inside a company or outside, is really very important to a business in terms of how it conducts its business, let alone how it's going to grow. So how does that help? How do you help in that regard?
Accountants serve as almost a counselor. I mean, really, we're a second set of ears to the client on a multiple facets. You know, not only just accounting for the numbers, but helping them understand what those numbers mean for their business and their growth. You're also working with a number of service providers, insurance agents, lawyers, and business brokers when they go through different types of transactions. And a lot of times, our clients are great at what they do, but not always do they have the most sophisticated internal accounting staff. And so it's an education process for both the owners and sometimes the internal accounting staff.
I like how you use the term counselor because you do really have to give advice. And we think of accountants and we think of tax advice, but there's really more to it than that. People don't necessarily understand the numbers of their own business, even though they're in plain view, in terms of projecting, in terms of analyzing cash flow. Most people say, I have cash or I don't have cash, but that's not a really good model for good planning, is it?
No, it's not. I mean, a lot of companies start off, even some of the most successful and large companies have started off as a sole proprietor, and they're used to tapping into the cash whenever they need it. But when they incorporate, they don't realize there's a lot of rules that go into that. It's just not easy to do that. Like I said, the owners are great at what they do, but it is an education and counseling process because you're trying to help them understand what the numbers are. Definitely the good owners, I try and help them and understand. I want them to understand what's going into their tax return. I know it's not their forte, but it's my job to try and dumb it down in the sense that not use so much accounting ease. so that they can understand it. I don't know everything that they do in a manufacturer. I don't know how to, manufacture a jig or a die or something like that, but I could sure help them account for it.
And then we've got the cash basis, the accrual basis. We have generally accepted accounting principles, all of which are certainly well known to a CPA, or you wouldn't get the designation. But the distinctions and why you might elect one or the other, or how to interpret the numbers in financial statements that are done according to generally accepted accounting principles are not intuitive for most people. So how do you educate so that they get the most mileage out of their own numbers?
It's a good question. Um, in accounting, it's not easy. It's not always intuitive because there's so many different rules, and it's like when working with a client, it's like, why are you asking for so much information? There are When you're preparing a reviewed or audited financial statement, you're also adding what's called footnotes to those financial statements, which tells a story about the client. What are their accounting principles? Are they on a cash basis? Are they on an accrual basis? What other principles are they using? And it's really sitting down with the owners to help them understand some of the fundamentals of how you recognize revenue. Yeah, it's more than just cash that's coming in the door, and it's more than just what came in at the end of the day, but what have you billed? What expenses are you going to be incurring, even though they might not be coming in or being paid until after the end of the year.
So one of the things I always thought was a valuable bit of advice about looking at the financial statements was the financial statements giveth, but the footnotes taketh away. Uh,
Footnotes take away, yeah, they tell the story. And a lot of times you're going to hear how important the cash flow statement is. The cash flow statement tells the story most of the time. It's not just what you have on your books at the end of the day, but where's the cash going? How is it being used? And looking at a lot of different types of ratios that are important to bankers for someone lending. For a prospective buyer, having good, accurate record keeping is critical to someone like Soeren that we'll be talking with shortly, who's a business broker. Having a good set of tax returns or financial statements, even if they're not audited, as a basis to start a conversation with a prospective buyer.
it really is the base for a proper valuation of the business is that you can have, for example, terrific intellectual property, but you're not maximizing what you're doing with it. So you're going to put a value on that, but someone else comes in and sees what you're doing, how you're doing it, and says, I could do a whole lot better than you can. I want to buy your business. Which again, takes us into Soren's world. But it seems to me that the accountant's at the front line of establishing the basis upon which you're going to be able to value a business. And it's certainly been my experience that especially the sole proprietors and mom and pop types, dramatically overvalue what they think they can get out of a business and sell when they sell it, particularly because they don't do any positioning to sell it at a good price.
That's correct. Um, but it starts with a good set of financial statements and some basic accounting principles. And if you get that going to a client, I love a brand new client that hasn't started anything because I can help mold them from the beginning. But if I've got an existing client that maybe have been unfortunately not advised properly by another bookkeeper or accountant, those kinds of clients are extremely important, especially those who want to really understand what's going on because they can be fixed. If you're not conscious enough to say all I want to do is produce the numbers, that's not going to take you anywhere. And my job and my staff's job is to really try and help educate you and know what you don't know.
Right. I mean, starting from the very beginning and doing it right from the very beginning is the ideal setup. And any new business needs a team, and on that team there has to be an accountant, or at least at the beginning a skilled bookkeeper,
And even a lawyer like yourself, especially in the very
and
beginning.
a lawyer and a banker and an insurance person. All these fun people that you can find in provisors. For those listening in, I remember one time in a business that Yeah, I'm looking at this and say this just all seems backwards to me. Well, it was backwards. The spouse of the owner did the bookkeeping, but she didn't know the difference between debits and credits, so she had them backwards in the entries. But she was at least consistent, so we were eventually able to figure out what was going on in this business. And we had to pay somebody to fix it all up. And yeah, I think she was a little miffed.
It's not easy and it can be scary, but at the same time, you sit down, you develop a plan with the client, and I picked up a client recently whose advisors were not giving them service throughout the year, and we're sitting down and we're going through the books from and helping the internal accountant understand, why are you making these entries? Why are these important? It's like, I can just do it this way. No, wait, there's an end product here that we're looking for. And if you just plug and chug, we're not going to get anywhere.
Right. And on the other extreme, you can't be like the Godfather's accountant. How much is one plus one? What do you want it to be?
Exactly. Unfortunately, GAAP prohibits us as CPAs, and we have a lot of restrictions as CPAs, but that's the reason why we're here, to help you get it right.
Exactly. Soren, let's turn it over to you. Give us your backstory and what you are now doing and how you got there.
Well, I started back in Denmark. When I was 12, 13 years old, I wanted to be a CPA. And coming out of business high school, business college, whatever we call it, well, I didn't get a position with a CPA, so I ended up in an accounting department in a public listed company and found that to be much more interesting because I now got to affect every part of the day instead of coming in once a year and look at it. But I wanted to be a CPA because I want to advise, give advice to business owners, help them understand the business, grow the business, and well, at the end of the day, prepare it for a sale. So it's kind of come to a good closing because when I came to California in 2020, I joined a business advisory firm, so as a strategic business advisor, and we were kind of using a process to set business owners up for a successful exit, and that led me to be certified M&A advisor through the Alliance of M&A Advisors. And well, then recently in July, I switched to Business Quest Brokers because now I've been trying to teach and educate the business owners and help them get ready, but I could not go the final step. I could not take them over the finish line, and I kind of wanted to do that as well. So now I'm actually working on becoming a business broker. I'm an M&A advisor at the moment, but I'm working on and hopefully will soon have my certificates so that I can be a business broker.
So I want to go back a little bit earlier in your career before you came to California. You had quite an experience in Texas with a tire company. So tell us what you did with that company.
Yeah, well, I came to Houston, Texas to build the world's largest tire recycling facility, and it can handle 10 million tires a year. And when it was almost up and running, I'm ready for processing, the owner, he decided he wanted America's management team. And I was invited back to Denmark, and I declined because my time in the US was not over. So I left the company in November of 2013. And then mid-February of 2014, I got a call from Denmark if I was busy, if I could help them because they didn't understand what was going on in the business in Houston. So to much regret from the CEO and the controller that replaced me, I came in again in March of 2014, and well, the CEO, he left in July and the controller left in September. And I got in and trained a new controller, didn't work out. So I took reins again in 2015. But from 14 to 18, we kind of improved the EBITDA by $10 million by setting up the right processes, the right reporting, so we could capture where does the money come from, where do they go? And that's the alpha and omega to find out, okay, where do we get the money from and where are they going? And if we can follow up on that and you can follow through and cut expenses and get some extra revenue, well, then you grow the business. So I can use that a lot. But on top of that, in some of the savings we did, I got to a $2.9 million property tax savings a year. So
literally transformed that business with
yeah,
what you did and the approach that you took to take something that was good but was suboptimal in terms of how it's operating, and you turned it
yeah,
into something that was really profitable. And that seems to me to be what is oftentimes missing in the company is that knowledge of how to grow to the next level, and then how to recognize at the next level I need more help
yeah.
than what I'm perfectly what I was capable of doing by myself before. So the business planning part of it, which has been a big part of your career, is something that any entrepreneur, any business owner needs to really build into their thinking if they're going to be strategic about growing their business.
It
So
is.
how do you get that message across to people?
So that's where I'm struggling, or I've been working on trying to get in front of the business owners to kind of educate them. I did write an article a couple of years ago that was posted on iebusinessdaily.com about exit strategy, because they really need to sit down and say, okay, where do I want to go? And how do I get there? And then when they have put down the path on, okay, I need to grow my business to X, and then I can retire, I can sell it. So how do we get to the X? And then simply start building from there. And then it's about getting some good advisors in there. And well, now I'm the business broker, so I come in at the late stages, but I can still come in and educate them on what they can do. Because if a business owner comes to me and say, I want to sell my business, okay, so what do we have? And I go through it. And now that I'm a business with Business Quest, we do valuation, or I can do valuations and certified valuations, but we start with a simple business broker's opinion of value, because then we know where we're starting from. And then through that process, we see, okay, here are rooms for improvements, and these steps you can take, and this will grow your business in 3-4 years. And then I'll be happy to sell it for you. If you don't want to commit to those efforts you need to put in, well, this is then the value we can get today. And then we can start optimizing how we can do that the best way. Find a good Craig Dart and have him come in and find out how can we do on the tax side. What can we do in the short run to optimize so we get most out of the tax structure when we sell. Whereas if we have a couple more years to lead time, then there are more ways to optimize the tax structure.
You know,
So
John,
go ahead, Craig.
I was going to say, you brought up an interesting point earlier. It's like owners think their business sometimes is valued more than what it really is. It was interesting because recently I did refer a client to Soeren's firm, and they thought they were ready to sell, but their firm did a broker opinion value, and they kind of determined it wasn't as valued as what they thought it was, and they got to sit back and say, okay, we got to clean up this segment of our business, or now we want to go ahead and venture into another segment or expand and do some additional marketing before we're ready to sell. And by using Business Quest brokers and Soeren's firm, that helped them realize that, as a CPA, I can do the accounting, but I don't do the valuations. That's where they come in. That's why this is such a good team effort strategically between all of us, sitting down and starting early with the client, sometimes years in advance. So now they're, instead of thinking that they're going to sell in 2 years, now they're thinking, well, maybe 3 or 4, and changing their approach.
The collaboration is important, and I was going to get to that. So this is as good a place as anyhow, and I'll come back to something else I want to talk to you about, Soeren. But the collaboration between the accountant and a business broker or a valuation person is really important, much earlier on than simply getting ready for retirement, isn't it? It's a matter of say, if I'm going to grow my business, I want sound strategies. And if I want to realize something out of an exit so that I could retire or move on to something else, I've got the basis to do that and realize what I want to get out of it. But usually it's a real sticker shock that especially the retail mom and pop store kind of thing isn't worth anything near what they think it is when sometimes they are forced to sell because of health reasons or a need for a surgery or what have you. So how do you get in early, I guess is the question. Does it come from an accountant being the nag and saying, go get your business valued on a regular basis? Does it come from inviting, people to come and listen to seminars? Or how do you do it? How do you get the
Yeah,
message out?
yeah, it is other advisors that come in and talking to the business owners and say, hey, have you thought about, do you know the value of the business? Because as you say, they have completely off the rail expectations to the valuations because they have heard that it's a company. They have gotten this much compared to the revenue for their business, but they don't really realize that, hey, but that's $100 million computer company, and we are selling something else that is not so sexy or not so valuable, and we are selling for 2 million. So the size does a lot, and well, what you hear in the country club or you hear down the street, it's oftentimes very wrong. So it is get with the well, I would not just say business broker, get with the business valuation, because not all business brokers do appraised or certified valuations. Business Quest, we offer the whole range of business brokers' opinion of value up to a full scope certified valuations, and that is needed when you have buy-sell agreements or partner buyout or different things going on in the business. You need to have these valuation now and then, and also for your just to find out what you want to do and how you get there. But unfortunately, a lot of the business owners, they get there too late because they don't think about it. But so, well, with my background now as a strategic business advisor, we kind of held down to Stephen Covey that says, hey, begin with the end in mind. So know where you're going, and then you can take the steps to get there. If I drive to LA, I put on the navigation because I want to get around the roadblocks. And if I drive to LA and I do not do that, then who knows how long it will take me to get there. I might get stuck somewhere on the I-10 or 605, whatever. So it's kind of put that roadmap down where you want to go. But yeah, it's talk to your advisors and talk to the guys who can actually evaluate your business, or talk to a business broker like us at Business Quest, because we know what's going on in the market. We can value the business. We can see what's going on. And as we say, know your value, sell for more.
So now I've got a new phrase. Life is a freeway. And if you've got a cruddy car, always drive in the slow lane near the off-ramps.
Yeah.
And that's our business advice for today, folks. No.
No, but
that is not what you want to do. That's what you want to avoid. But
exactly.
It seems to me that there are too many sad stories where you come in too late to do much good. You position as well as you can, but the sale needs to go faster than you can fix it.
Yeah.
And the same thing is, the difference between a good accountant and a great accountant is the good accountant will do the work that's assigned. The great accountant will be constantly, reminding the client about what they can do better. It's like, and it's not necessarily the use of more accounting services. It's the counseling function, right, Craig? It's like get the help you need to make your business thrive.
It is. It's asking why. Why is this way? I'm not beating you up over the head over the case. I know you got the support to put on your tax returns to support this expense, but why is this expense this way? And oftentimes, I mean, if I pick up a new client, it's like, why do you keep asking me all these questions about my expenses? Don't you trust me? Yeah, I trust you, and I see the support. But again, because I want to know what's going on. And if an accountant's not doing that, and all they're doing is regurgitating the numbers, that's great. Like you said, they're good, but they're not great. You got to be prepared to dig in with your clients and help them and give them the encouragement that they need sometimes. I had a plumber that was a great plumber, and then he was so scared about starting his business, and I encouraged him, you can do this. You've got the tutelage. I'll help you with the accounting. Don't worry about it. And I'll help you manage the money. No problem. And sure enough, He's tripled his business over the last 3 years, um, just by some additional advice and sitting down and understanding his cash flows, understanding where he's going with this, and watching his expenses.
So how does this tie in? And you both have a role in this area as well. Good business planning also includes good estate planning. So we've had a couple of the estate planning folks on earlier in the podcast series, and I put it the other way to them. I say good estate planning involves good business planning too. If you happen to have one or more spouses involved in owning and operating a business, so how do you put all of these things together? So that there is literally a package, even though the package is being created by multiple professionals. I guess it's more or less the coordination of this that I'm trying to get to. How do you encourage that in a business?
So if a business owner comes to me and he wants to sell, I would ask, okay, who do you have on your team? Because it's important to have the team. You have the estate planner, as you mentioned. You need to have the banker has to be involved, because the banker has to provide enough cash to grow the business if we need to grow the business before we sell, or put the line of credit available. We need the CPA to do the taxes. We need the IT company to go through all the IT to see if there's any liabilities there. There is all the different aspects, and the good CFO. Well, I was former good CFO. Now I hope now I'm turned into the business broker, investment banker. But have the team in there, and if I come in with the business folk into a business owner and he wants to sell, or she wants to sell, say, okay, what's your plan? What's going on with the lump of sum of money you get when you sell? Can you live off of that money after the business is sold? Is it enough? How much do you need after tax proceeds? And that ties into the estate planning. Then we need to have the finance advisor and the estate planner or estate attorney come in and put the right agreements in place as well. And a lot of business owners, they think, okay, well, somebody will knock on my door and I'll just sell. And a lot of people, they are knocking on the door right now, and they offer a lot of money. And then they tie them down for 12 months and then say, okay, now we go through your company and we do a due diligence and scrutinize all your financials. And after 12 months, where you have lost track on the business, you have been working on selling the business, the revenue went down, and now the potential buyers will say, instead of the 10 million, now I want to pay you 5. So get ready. Prepare for the sale. And I don't know if Craig will agree with me on this one, but have 2 sets of books. With that, I mean you have the business books according to the accrual principle, and then you let CPA, let Craig do all the accounting for the cash basis for the tax return, because it's easier or better financials if you have them according to the accrual, at least for a business perspective and the valuation perspective.
I do agree with you, Soren, because most people, especially smaller businesses, do everything on a cash basis, and they don't understand the accrual basis. And that is where a CPA is needed much more than just a good bookkeeper. There's some fantastic bookkeepers. I hired one as my senior accountant recently, and she's fantastic. But really understanding the accrual basis for your purposes and for the bank's purposes is so critical.
And I think the key takeaway here is that you want best practices literally from the very beginning of your business. And that's when you think, I don't have the cash, I don't have the time to learn, and I don't want to deal with a bunch of people who are going to be sending me a bill each month that I'm going to fret over paying. But that's the worst way of thinking about it, isn't it? You provide a level of services where the business is, and you help them get to the next step, and which then helps them pay for more elaborate services, more sophisticated services as they grow. And there's a natural progression to this if you start it right and you do it right. The more expensive way is not to get that help, and then you have a real problem that requires fixing. And the fixing is far more expensive than doing it right from the get-go and kind of paying as you develop.
Yes.
getting that message across seems to be a very, very difficult proposition, isn't it?
Yeah, I think that is the challenge. And well, there is a network out there. There is the fractional accountants. There is the fractional CFOs. There is fractional CMOs. There is fractional sales. So when you don't have the business to have the full time employees and departments, tap into all the networks out there and the experience out there that can help you for a fraction of the price.
That
But
makes
again,
perfect sense to me.
and it is, and I said, well, important to be ready. And you say start at the beginning, as begin with the end in mind. So find out where you want to go, and then take the steps to get there. And then when you look at about 60% of businesses will go to market at some point in time. So that means 40%, we'll come back to that. But of the 60% going to market, about 25% will sell.
25% of the 60%?
Yes.
Okay.
So, and of the 40% that didn't go to market, well, a lot of them, they are picked up by strategic buyers. But then there are a part where it's a one-man show or two-man, and there is nothing to sell. It just shuts down. But 40% of the sales that are happening has not been on the market. So it's just about get ready. Because if you know the value of your business, then you know if your business is $5 million worth and somebody comes and offers you 10 million, well, they will drag you down for a year and they will handcuff you, because that's a non-compete, and you cannot go solicit with others and talk to others or anything. You're tied to them for 12 months where they can just look at your business and do whatever they want. And you don't want to do that if you know already it's double up on the value.
Right. So we're about at the end of our time for today. I am reminded of Yogi Berra's famous saying, if you don't know where you're going, you won't know when you get there. And it's no way to run a business or an airline or air traffic controllers or a government, now that I think about it. And that will do it for today. I want to thank our two very knowledgeable guests, Craig Dart and Soeren Aarup, for spending some time with us and sharing their insights. And remember that the help that you need is right in your own backyard. That's it. So long for now.
Thanks for watching or listening to, depending on the case, the Professionals of the Inland Empire show with your host, John W. Tulac. If you have a suggestion for a guest, email him at jwtulac, that's JWTULAC, @gmail.com. jwtulac @gmail.com.